digital warehousing services, Arya has expanded to become a full-service provider of digital solutions for storage, processing, financing, and market linkages. Arya's clients include farmers, farmer producer organizations, financial institutions, SME agri-processors, commodity traders, and corporate agribusinesses. We are honored by your presence, sir, at Agmatrix platform to address the participants who are joining from Pan India. It's a privilege to introduce Sir. Chattanathan sir is currently the Managing Director of Aryadan Financial Solutions Private Limited and co-promoter of Arya.ag, the largest grain harvest platform and most profitable agri company in India. Prior to becoming MD of Aryadan, he was a group product head with ICICI Bank Limited in rural and inclusive banking. Sir has been with ICICI Bank Limited for over 2 decades. He has spent most of his work time in the rural space. Sir is an angel investor who has helped investors in seed funding in over 15 odd companies, thereby creating avenues for growth and employment. A philanthropist who has been helping people in need and has made notebooks free for all the students in SKP Government College, Guntakal, for a period of 10 years, in addition to creating a computer lab and 6 additional classrooms for the college. Sir was instrumental in designing various products in the rural domain at ICICI. He has also been instrumental in evolving the post-harvest space in agriculture, working with various industry bodies as well as advising corporates. Sir has assisted various expert panels of Reserve Bank of India in the agriculture sector in evolving policies. He has represented in various forums in agriculture and microfinance, including that of industry bodies like FICCI. Sir has authored various articles and papers, including the paper on enhancing the flow of credit and managing risks in agriculture, which he co-authored with Nachiket Moore and Rajiv Bhantari, which was published in India and the Global Economy by Indian Council for Research on International Economic Relations. He is an author of various books, including the award-winning fiction My Rides with Sahib. This year, he has released the fiction Anjanamma Igniting Aspirations. Sir, we welcome you once again and request you to address the participants on warehousing and at Fintech. Over to you, sir.
Hi, good evening. I think it's slightly late in the evening and I don't know how many more sessions are there. So I'll try to make it as interactive as possible. I know that it's an online one, so the interaction could be a little bit restrictive. So what I will try to do is that I have a small presentation. So I will run past it. And after that, we can have an engagement based on what has been talked about. So I will try to actually run past through the presentation. Let's share screen. Yeah. You're in a position to see this, right?
Yes, sir.
Yeah, I think this introduction has already been given about Arya, so I'm not going to dwell on this because mostly it's been spoken through. So what we'll try to do is that we'll try to see some key trends which are there across the macro trends. So now every one of you know that India has become the most populous country surpassing China. So this doesn't stop here. And with the current rate of birth and death, there is an expectation that we may increase by another 20 crores in the next 2 decades. But my belief is that it may go beyond that because the difference of birth has not been taken into account in the birth rate and death rate. So we may probably stabilize around 180 crores. So this warrants that much amount of incremental food required for the country as a whole. And the one good thing which the country has been doing is that on Agri side, we have been consistently hitting about 300 million metric tons of grains, 300 plus actually. But having said that, by 2050, if we talk about the world requires more than 60% increase in the food production of what we are currently doing. That means this much amount warrants either in terms of incremental productivity or in terms of saving the post-harvest losses. But the good part is that last few years, especially the last decade, I would say that a lot of entrepreneurs, a lot of tech engineers have started getting into the agri space. That's why this space is now being defined with a lot of technology getting deployed, and we call more frequently the usage of what is called Agtech or Agri tech. And added to this, we also coined a smaller term called Ag Fintech, which essentially means that how do you deploy incremental credit to that agricultural space. And the one beauty of what is emerging is that once this technology companies are getting into fray, we see that almost about 1 crore new employment getting created in the last few years. I think in the next 2 years, you would see about 90 lakhs to about 1 crore of people being employed in this ag tech space. These are all very beautiful things, but I do not know how many of you have gone through last 2-3 days paper. It says that one of the farmers in Maharashtra had sold 500 kilograms of onion at just about, to be precise, at about 2.49 rupees. And the same paper, maybe a day or later, it carries that world is starving of onions. So on one hand, we are saying that the world is starving of onions, and on the other hand, we are saying that the farmer is recovering only about 2 rupees 50 paisa for 500 kgs of onion. So because he had to travel some distance, this entire cost compositions have been put into to get to this 2 rupees 50 paisa. So while doing so, what is more important for us to is that how does a farmer actually gain, and how he'll be in a position to sell, and where he'll be in a position to sell this the grains and the commodity which he is producing at a right price by which he'll be in a position to make money, and he is not starving also. But that's not the situation here. We have advanced in agriculture. Our productivity has gone up. Our production has gone up. Still, when we look at the farming community, there are a lot of places where invariably they are forced to sell because they do not have the financial wherewithal to sustain. And this we are seeing more closer to the farm gate even now. One of the reasons could be that the fragmentation of the land holding has been on rise. 84% of the farmers are small and marginal farmers holding less than 5 acres of land. So we need to address these two important imperatives as far as the country is concerned. Then this is not only with respect to farmers. With respect to the processors, they have some other problems. There is a demand side which is there, but they are also not assured of continuous supply because there is no transparency in the system where how much of goods are lying, how much is getting produced, whether a processor will be in a position to anticipate production and say that I would be in a position to store this many metric tons of commodity, which is equivalent for my production. Even that's not possible at the current stage because there is no transparency either in terms of production or produce available or how much is being stored across the country because it's not on a transparent platform. So these things actually gave us as entrepreneurs to figure out if we can address something. So we have tried to address this in a small way. It is too small because the country is very large. And I feel that there is a humongous opportunity for each one of us who are listening in the call to think in these directions to see that how will we address most of these issues and make his life meaningful as well as we also as entrepreneurs survive. So that's where we thought that we should start looking into this space. So all the three promoters who are there with Arya, myself, Anand Chandra, and Prasanna, the co-promoters, we decided to quit from ICICI Bank and started actually Arya. So what we tried to do is that, so what I'm trying to do now is that I have addressed the problem statements and I will try to pass through what we are doing and take it through in terms of solutions, because there are a lot of other solutions which could be possibly be there. And this will be an ignition for you people to think in terms of what are other probable solutions which could emerge too. So what we tried to do is that we said that we'll have to try to address these in 3 stacks. One we said is the commerce stack, where we said that we need to actually figure out how do we increase transparency and build a model wherein a farmer, a trader, a processor, all are having the same vision as far as the commodity is concerned and the price is concerned. So that's what we defined ourselves as commerce stack. Then with respect to finance stack, basically we as Arya were operating and are operating only in the primary and secondary markets, more near to the farm gate rather than in the tertiary markets, which is the urban centers. So 80-90% of our business actually revolves around the primary and secondary markets more near to the farm gate. So when we went near to the farm gate, we suddenly realized that access to finance is also a problem which needs to be addressed, because any farmer, trader, processor who comes and actually stores the produce in the warehouse is in immediate need of liquidity. Banks were not extending enough of money into this segment. You would be surprised if I say that 40% of our customers are first-time institutional borrowers who are there with us. So this speaks volumes of access to finance, which is there with respect to farmers. Then we thought that the other portion which we need to address is that the infrastructure. In this part, actually, as a nation, we had done probably very good, because while we were operating the primary and secondary markets, when we went there, we found that enough of warehouse construction has been done by the entrepreneurs, I would say, through the support of the government. Because of the fact that the government had put up schemes like Gramin and the Bandara Yojana scheme, marketing scheme, etc., over the period of years, giving a lot of capital subsidies, a lot of warehouses sprung in the primary and secondary markets. These were all individual entrepreneurs, maybe a woman, a man, who took these because they had a piece of land on which they constructed the warehouse. But the problem statement was that they were insufficiently occupied because they did not know how to run the warehouse. And the second problem which was there was access to finance was not there. So these two, we thought that the infrastructure we need to address. The third is that when we wanted to expand these warehouses, then there was a constraint, because the constraint was that the only option which we had was to actually construct warehouses. We thought that we will not do that. So we thought of adopting scientific storage practices. And currently we are operating in about 56 of the Indian districts in 21 states. We are operating more to the closer to the farm gates, and we are trying to leverage technology. Well, the objective is that whether we can create value to all the players in the ecosystem in the primary and secondary markets. So now what we did is that while we started individually each of these, because we did not want to plunge and make losses, we put all the three of us pooled a little amount of capital, and then we started working on each of these tracks separately. So what we tried to do is that initially we started working on the infra stack, which is basically the warehouses. Then we went to the finance stack and then to the commerce stack. Now, if we see what we have done is that over the period of last 10 years, we have integrated everything into a single platform called arya.ag. So any stack which I'm talking about, suppose if somebody wants to actually go and book a warehouse, a space in the warehouse, he can go to our site and book a warehouse. A warehouseman wants to list the warehouse in the site, he can still go and do that. And somebody wants to have access to finance, so he can go and access finance through the platform itself. Commerce, for example, anybody wants to actually go and list a commodity which is there in the warehouse, he can go and list a commodity in the warehouse. Today, we are happy to say that we have around 10,000 warehouses listed on the platform. Out of that, about 2,000, 2,500 we operate on our own. And finance, we have started actually lending in the last 3-4 years. We are happy to state that in last June, we peaked about 500 crores. And my belief is that this year, cumulatively, this financial year, we would touch anywhere between 900 to 1,000 crores of disbursement with respect to finance. And commerce stack, which I'm talking about, almost about 400-500 crores worth of grains have started growing through our platform. All these things now are enabled technologically. So it's not that everything is being done physical. So suppose, for example, a farmer comes for a loan, the access to finance is all automated. So somebody inputs the data directly it goes there. A person comes and stores in the warehouse. The disbursement sanction is automated because ML, it is through machine learning up to 1 crore. And the moment he lodges the produce, he can actually visualize of getting his money within a few hours. Similarly, for example, when he wants to release the commodity on payment in the banking system, generally it used to take about 2 to 3 days. Today, what we have effectively done is that a person can actually go and look at the warehouse receipt within the application which he has, pick up that warehouse receipt, goes to the payment, and then immediately the releases happen. So I'm happy to state that 100% of the disbursements today currently which we make is online. There is no physical interference which happens. And with respect to releases, still people are getting used to it. We are somewhere between 26 to 30%. My belief is that in a year or so, we will translate that about 80 to 100%. That's where we stand as far as this thing is concerned. So one of the important things in the storage is that we have currently not touched the cold storage part. We are predominantly only in the grains. With respect to grains, what we have tried to do is that we said that if we have to expand these warehouses, instead of getting physical, because already physical warehouses are there, I'll be in a position to go and put hermetic storage. This is how the hermetic storage happens. Here, once the bag is actually tied up, the carbon content is maintained and there is no fumigation required. And at the end of the tenure, the bag is opened up again and everything is controlled through Internet IoT. And with respect to the warehouses, one of the important risk parameters which we found was collusion. So because we are operating in remote areas, in over and above the physical audits which we have started doing, we have started building a surveillance. So ARIA surveillance is what actually takes through whatever is happening in the warehouse. So any intrusion is auto detected and it sends actually a trigger, a message to the people who are responsible for it. So you can see actually the bags are getting counted as and when they come in or go out. So it records it properly and gives the continuous information as far as the storage is concerned. So this is how we have already deployed around 400 odd warehouses with the AI vision. And our belief is that at some point of time, almost all the warehouses, we will have these type of mechanisms put in place. Now, end result, if you ask what is our aspiration, is that we want to have an entire aggregated platform. Currently, if you see, we are at storage, we are at finance, and we are at marketplace. There are two parts which are not linked completely. We are trying to give, and we are trying to actually getting into the pre-harvest also through crop intelligence. We cannot compete with the banks as far as the input credit is concerned, crop input credit is concerned, which is mostly given in the form of KCC, because the rates are subsidized there. Government of India also gives the interest subsidy on those for small and marginal farmers. So what we would try to do is that we would work along we would work along with the partnering banks to ensure that there is discipline as far as the credit delivery is concerned. It becomes easier for crop monitoring. It becomes easier to actually deliver credit as per the need. Currently, what happens is that KCC is actually done at the beginning of the year by based of the acreages, etc. So if somebody wants to have a proper due diligence in terms of credit offtake, that would be easily possible with the crop intelligence which we have. Market space, we have already developed. Currently, it's in the digital mode because everyone is learning. So we have business development executives who are there at the ground level, who actually interact with the farmers, traders, processor, bring them online, and the transactions are put through online. We have also enabled auction platforms within the site aria.ag. So if suppose some trader feels that he wants to put it through an auction, there is a possibility. Currently, the system is live, but we are yet to witness a successful auction. We have actually floated auctions, but as far as the buying, selling in the auction is concerned, we are yet to see some good traction as far as the platform is concerned. But it has been completely enabled. Now, what are the things which we have developed technology is that we have actually developed everything and the blockchain is ready. What we are intending to do is that everything to be put on blockchain. So blockchain in a layman's perspective is actually a pipe which can be seen by everybody. So I don't want to get into technicals because I myself, I'm not a very technical guy, but to make it precise to everybody with respect to the finance will completely be put into blockchain. The UAT has been done and this should be live maybe in 2-3 months. Arya Vision I have already spoken about. This is the surveillance which we have put in the warehouses. What we try to do with respect to small and marginal farmers is that, as the government of India is also promoting the farmer producer organizations, because we feel that if the small and marginal farmers have to be actually successfully kept into agriculture, the only way is that by way of aggregation, and FPO comes handy with respect to that. So what we have done is that we have developed a separate applications for the farmer producer companies, which is called Arya Shakti. So in this application, they can broadcast messages too. So whatever information they would want to give, they can give. Similarly, if they want to integrate all their farms and see that what is the stage at which each of the crops are being done, with Arya Shakti, we would be in a position to do that, because as already told you that we can actually go to the last leg to figure out what is happening at the farm, because the farm can be mapped into the digital imaging and we can get to that. Then Aryaverse is actually a satellite vision where we are putting algorithms, and this is basically used to determine the crop stress, etc. On the individual basis at the farmers level, we have loaded in Arya Shakti because that becomes handy to the people, the farmers at the FPO level. Aryaverse, this can be used by actually people who are there, who want to know where world over the crop is being grown, etc., etc. So these are things which we have been doing, and ultimately the objective is to that we should be profitable and we should continue to impact the society at large. So our objective is not to make money alone. So wherever we feel that we can create impact, we have started doing that. So as far as food losses are concerned, anywhere between 7 to 10%, I think we are in a position to successfully do this food losses by effective storage. While we are working with entrepreneurs around, we are also ensuring that through the FPOs, we have started actually putting up women promoted FPOs also. So what is the transition which we are trying to do? As much as SSG, JLG movements were there, we were also trying to see that is there a possibility of actually women heading the FPOs, and we have seen that they have successfully run, because a few FPOs in Gujarat, UP, etc. We have seen they actively participating and implementing the new technologies which are coming into play. And we are also supporting the MSMEs, etc. So, and in the process, what we have tried to do is that we have also done a lot of partnership with various state governments, including Maharashtra, Uttar Pradesh, Gujarat, Bihar, Odisha. We have partnered with large World Bank agencies like UN, World Bank, and a few private companies like Bayer, Tata Trust, etc. The end objective is that how do we actually maximize the return for every grain which is getting produced? That's the objective with which we are working. Hopefully, we'll be in a position to take through to a larger extent this mission statements. Last but not the least, as already briefed, these are the books which I have authored. So anybody who is keen to look into can look into it. A sales promotion ho gaya thoda. So sorry for that. But yeah, these books are good books, because this Anjanama is actually a merge between agriculture and robots. So I think that's a good thing which you can look at. Being an agri session, I don't want to detail all the books, which will not be fair on me. This is where we stand. If there are any questions, I would be happy to answer those questions, because I thought let me cut short my presentation as much as possible.
Thank you so much, sir. That was really indeed an interesting topic, and gained a lot of insight on this topic, sir. Participants, if you have any questions, please drop them in the Q&A box, or perhaps raise your hands. We'll allow you to speak.
Chat session, are there some questions, or I do not know what is there? And chat voice is audible. Okay, no.
Yes, sir. We are checking, sir, if
Yeah.
we have any questions. We'll just wait for 1 or 2 minutes, and if there are no
Sure,
questions,
not a problem at all.
yes, sir. So there is one question, sir.
Yeah.
How collateral warehousing concept works, sir?
See, in warehousing, basically you need to understand the two aspects. One is that there are field warehouses which are actually privately owned. Okay. So there you don't have licenses. I, as Nathan, actually go and operate a warehouse. So that's a private godown. It is not warehousing. Okay. The second is that there is a licensing which is there. People come and store goods in the warehouse. That is actually warehousing. So there you take licenses from the respective authority. And third part which is there is that one good thing which has happened in the industry is that there is an institution which has got created called WDRA, WRDA, Warehouse Regulation Development Authority, right? So if a warehouse has to issue a negotiable warehouse receipt, it has to get compulsorily registered with WDRA, right? Now, the collateral management concept comes in basically because there are a lot of private godowns which are getting operated. So earlier, what used to happen is that in the banking industry, there used to be a concept called key loans. So a branch manager would go to the respective godown, lock the godown and come back. And there was not any assessment which was being done, whether the grain is getting stored properly, quality of grain, etc. It used to get physically verified in terms of number of bags, and then the key used to be with the branch manager. So whenever a person wants to come and actually release the goods, the payment is done and the branch manager comes and opens and the respective bags are taken away. That used to be the old concept. But there were a lot of issues which happened because of this, because the quality, quantity, etc. was not monitored because they did not have the sufficient wherewithal with respect to those commodities, because basically the bankers were financiers. Then this concept called originated earlier, maybe in 2000, 2002, 2003, what we call it as a collateral manager concept, right? So what is a collateral manager concept? The person who is being employed by the bank, who takes care of collateral of the bank, is a collateral manager, right? So today you have large number of collateral managers. Arya Collateral is one collateral manager. You have NCML, you have Star Agri, you have NBHC. These are all various collateral managers. So basically, collateral manager as a concept is to manage these private godowns, right? But in the process, what happened is that these collateral managers also started managing warehouses also, right? So security concept is two different concepts as far as storage is concerned. One security concept is that when you actually appoint a collateral manager as an agent of the bank, I take custody of the goods as a pledge. Aaj ki tarikh par today, if you want to go and actually take a jewel loan, you go and pledge jewel to the bank and then take a loan. Jewel goes into the bank's custody. Here, the commodity cannot be stored in a bank branch. So the collateral manager takes custody of the goods on behalf of the bank in the warehouse, which is identified. So the collateral manager is actually the agent of the bank. So there the security gets created by way of pledge. With respect to the private warehouses which are there, the security is not the goods, because the bank doesn't take custody of the goods. There technically you don't require a collateral manager. There the security gets created by way of lien on the warehouse receipt, because warehouse receipt becomes a legal tender. So just like you are actually pledging a fixed deposit receipt which has a value, a warehouse receipt which is issued by a warehouse which is licensed carries a similar quasi-negotiable instrument type, which is actually lien marked, and then the fund is happening on the warehouse receipt. So in a warehouse which is their private license, technically you don't require a collateral manager, but in order to build trust within the system, banks have started using collateral managers even for the private licensed warehouse. Then the third is a dematerialized receipt, because once this WDRA came in, you just had this dematerialization of the commodities which are stored in the warehouse. As much as you have loan against shares, today you can actually take loan against the dematerialized receipts also. So CDCL, etc., are the custodians of those receipts. So you can actually lien mark those receipts and take loan against them. So these are the various concepts which are there. So a private godown is not actually a warehouse. Banks take pledge of those goods through a collateral manager. I hope I have explained it enough. If any doubt, I would be happy to explain more.
Yes, sir. There is one more question, sir. How will blockchain help Indian agriculture?
See, I would not get into that completely. We are trying ourselves into blockchain. See, anything putting into blockchain means increasing transparency. Let me put a blind statement like that. Today, wherever transparency is not there, and there is a movement in the form of chain from one to the other, all those things can be put into blockchain. So if you want to see tomorrow where the seed has been produced and how it is reaching to the farmer, I'm just giving broad outlook. It's not done today, but imaginatively, if as a promoter, if I would want to see this, I would say as a blockchain company, I may go and give assurance to somebody saying that from the farmer field till the final sowing, how the seed is getting moved, I'll be in a position to track in the chain. So anything which you put once into a blockchain cannot be iterated. So if iteration is done, for example, somebody has put this is 100 metric tons of hybrid seed of maize, some MH01, whatever it is there, and it is traversing a path through the blockchain. If somebody changes the parameters of that, it will be visible who has changed and why it has changed. So that trust level, once you are putting into the chain, will be complete. So blockchain can be deployed across any spectrum, which will increase transparency in the system.
Okay, sir. So there is one last question, sir.
As far as to address the last part, why we are putting in blockchain is that I do not know how many know the history of funding against commodities. History of funding against commodities is always fraught with dangers of collusion risk, frauds, etc. So many a times the banks are always suspicious whether on the same stocks two receipts are being issued or not, whether it has been iterated or not. So these things we want to avoid in the system. Hence, we are putting it in blockchain. First, we will put our warehouse receipts in the blockchain. And our objective is that they should be used by everybody in the system.
Okay, sir. Right, sir. So there is one last question, sir. So how ARIA AG is connected with collateral management?
See, as I said, we have three blocks. Three blocks which I was talking about. Warehousing stack which I talked about is actually we hire warehouses, we act as collateral manager to the various banks also. So ARIA collateral, which is one of the blocks which is there, actually acts as a collateral manager to various banks, including public sector banks, private banks, etc., etc. When we act as collateral manager, we take custody of the goods on behalf of the bank. That's what I told as pledge. So we take as custody and then be there. So that's one of the income streams which we have. And we are happy that we are one of the preferred partners to various banks.
Okay, sir. Right, sir. So there is one more question, sir. What is ROI in future warehousing and trading of commodities?
No, I couldn't understand the ROI for what?
In future, where?
So I'll just answer it out like this. ROI, which we want to be responsible lenders. So we have been charging anywhere between 13.5% to 14% with respect to the warehouse receipt finance. Because we are an NBFC, we do not have the right to go and actually take deposits or maintain savings bank account. So our borrowing is dependent upon how much is the cost at which we get the money from various banks. So that's the broad indicative cost at which we are doing it. We give a choice to the farmer to go and actually borrow from the banks first phase, because even there we make money because we have put a warehouse, we manage the warehouse, so we get a referral fee of 1 to 1.5%. So we are okay with it. So the first choice of borrowing is given to the farmer or the trader or processor. If you want to bring in some banker, please bring him, because I will not be as competitive as what banks are doing, because their cost of funds is far less compared to us.
Okay, sir. Okay.
And in trade, there is no cost of funds or borrowing because we facilitate in the platform. See, we don't hedge positions. We don't speculate. Our objective is to marry a buyer and a seller more transparently. So if a trader is there who wants to actually sell produce to a buyer, he has the option to go to our platform and sell. So the price there, we don't get any interest income and all. We just get a commission, right? So it's a small commission which we get as far as that is concerned. But sometimes what happens is that large corporates, because we are at the ground level, we have the capability to procure. So corporates may get into a tie-up for procurement. So at that particular point of time, whatever is the borrowing cost for us, the carrying cost which is there, we get loaded onto that price. We don't charge it as interest, but that's the extra amount that they will have to pay while releasing the goods. So that will become the sale price for us.
Right, sir. Okay. Thank you so much, sir. It was a really great session, and thank you for your wonderful guidance and for being with us in spite of your busy schedule. Thank you so much, sir.
Agmatrix is doing a great job of bringing in a lot of visionaries in this field. And I presume that people will take the right perspective this, because see, everything cannot be taught in a few sessions, but at least at any point of time to get an overall matrix, because I was seeing through the various panels and the persons who are speaking. At the end of the course, I believe that the insights which are happening within the industry and getting updated, this will be a good session, good job done by Agmatrix, I feel, because I saw all the people who are there in the various panels. Great job, Agmatrix also.
Thank you so much, sir.
Yeah.
Thank you
Thank
so
you
much,
so much.
sir.
So yes, moving on, today we have with us one of the eminent keynote speaker. It's an immense pleasure to welcome Mr. Emmanuel Murray, sir. Mr. Emmanuel Murray is a senior advisor at Caspian Impact Investment, advisor for FPO and Agri startup, evangelist with 36 years of rich and varied experience in agriculture, rural credit, and microfinance, including 5 years as head of operations of an impact-focused NBFC with a portfolio of over INR 600 crore. He is additional director for Nabkisan Finance Limited. He has special interest in working with small and emerging institutions and projects with unstructured businesses. Sir has vast experience of 25 years working with NABARD. Since last 7 years, he is with Caspian as senior advisor. Sir is an alumni of IRMA and has published over 150 papers and reports. He has helped build grassroots institutions, FPOs, supported various development projects, been on board of rural banks and MFI. Now, without taking much time, I request Sir for his session. Over to you, sir, to tell us more on microfinancing in agriculture.
Thanks so much for the introduction.
You're welcome, sir.
I see that over 120 participants. It's a pleasure to be able to address all of you this evening. And the subject given to me is fairly new and complicated. And therefore was an opportunity for me to also explore this space. Let me just see if I can share the screen. Can you see that?
Yes, sir.
Okay. So we are going to talk. Can you broadly describe who's the audience that I am addressing?
Yeah, so we have a great number of UG, PG, and MBA students and agri professionals as well. So,
Okay. So I would request one or two of you to kind of make notes and maybe paraphrase what I'm trying to say and share with me later on. It will be a great help. Okay. Right. So as Sharon had introduced, my day job, my primary engagement is with Caspian Impact, and I lead a Agri equity fund which is investing into early stage businesses. We plan to invest in about 10 agri startups over the next 2 to 3 years. And we just made our first investment this month, and we will be announcing it soon. And there's so much of talent and ideas and solutions which are very relevant to the country that are starved of funding. And we hope to be able to bridge that gap to some extent and build robust businesses which also help Indian agriculture. So that is where I am at this moment. I would be speaking on the subject of microfinancing in agriculture, as was given to me. And I have been in the microfinance space ever since it emerged in India, which is maybe the 1990s. And have been actively involved in working with banks as well as microfinance institutions. Okay, so the reason why everyone is talking about microfinance in agriculture is depicted in this picture, which I've taken from a report by Microsave Consulting, and which was commissioned by ThinkAg, which says that more than 50% of small and marginal farmers still do not have access to credit. And over half of those small and marginal farmers who have access to credit are relying on informal sources of credit. So can formal credit be made available to small and marginal farmers? That is a question that is challenging everyone. And as you can see at the bottom over there, totally there are reportedly, we really don't know the exact number, close to about 14 crore farmer population in India. So that is the ultimate target of households who are into agriculture in India. That's also a very debated number. Many people believe that this is an inflated number. The actuals are smaller than that. But all said and done, these people are doing cultivation largely for self-consumption. They have small marketable surpluses, but they are the backbone of agriculture. And there is a lot of opportunity for them to participate in the market if given an opportunity. And that's where I think credit has to play a role, and that is what everyone is looking at. Okay, so the puzzle that has to be solved is how do we enhance credit flow to small and marginal farmers for agriculture. Now, 70 years post-independence, the several programs have been taken up. Banks were nationalized, schemes were introduced, and still we are grappling with this question. So it's not so easy a problem to solve. And of course, one reason for that is, over a period of time, there has been fragmentation of land. Families have, redistributed what the grandfather had among the children. And so the average unit size or land holding has reduced. That could be one explanation for it. But still, I think significant numbers are outside of the purview of organized credit. Now, the reason why farmers should borrow, if you go and meet people, farmers in rural areas, some of them may say, why do I need to borrow credit at all? Why do I need to go to a bank and take a loan? I'm quite okay. So the arguments in favor of formal credit is first that the informal credit, the money lender or the tie-up credit, what we call it, the borrowings from the fertilizer dealer are all very expensive costs. For example, the fertilizer dealer may not actually charge an interest, but the price at which he pays, the quality of inputs that he provides, the tie-up that he says, if you buy this, you will need to buy that also from me. So those kinds of unfair transactions happen because of the dependence on the input supplier for credit. And the other part is to get more appropriate structure. So can you get a loan from a bank when you need it and not when you don't need it? So the appropriate structures of credit need to be available, not just credit of one kind like microfinance. And to unlock capital in agriculture, unlocking capital is basically a simple thing that if you already have land, if you already have some, labor, all you need is inputs for agriculture. So if credit can provide those inputs, the returns from capital will increase. So underutilized assets can be put to use by unlocking capital in agriculture through credit. So that is now broadly, I think of that category which we saw in the first slide. There are two kinds of borrowers. There are two kinds of people who are still outside of the formal banking system, formal financial system. Those who are new to credit or those who have never in the past accessed credit, and another significant number who do not have adequate credit. So inadequately served credit. So these are the two kinds of categories that we are looking at. Both of these offer very large opportunities. At least the numbers look like that. Okay, so the most popular product in agricultural credit is called what is called the Kisan Credit Card. It is more than 25 years since the KCC was introduced. It is like any other credit card that we hold in the cities or which you know of. Limit is given to a farmer, limit based on the area of land that he is cultivating, the cost of cultivation, as well as any incidental costs. There is a factor of, let us say, consumption expenditure also that can be built into the credit limit that is provided under Kisan Credit Card. And this limit is available for a period of 1 year. So the farmer can borrow when he needs, when he starts his agricultural operations. And then he can repay it over the course of the 1 year at the time of harvest or whenever he has the cash flows. And then the limit can be renewed. As the cost of cultivation goes up or his land holding increases or there's changes, this limit can be enhanced. So every year, typically the cost of cultivation figures are recomputed. And then accordingly, crop-wise, scales of finance are introduced. So many of you are Agri graduates. So you should know that there is something called a scale of finance for different crops. And these are determined district-wise. And on that basis, Agri finance is provided. As of today, there are 3 crore Kisan credit cards, according to government statistics. 3 crore KCC, including dairy and fishery. There are not only credit cards for cultivation, but also for dairy and fishery. There are other cards for handloom and other activities, but those are excluded. So in agriculture itself, there are 3 crore. And as you may have known, the union budget was recently presented by the finance minister, and who has set a target of 20 lakh crore of farm credit to be extended during this financial year, April to March next year. So as of now, it is closer to 18 lakh crore, the farm credit. It will be enhanced to about 20 lakh crore. So substantial numbers. In terms of numbers, it is significant. Now, when we talk about microfinance in India, so we are taking a little detour from agricultural credit to microfinance. So microfinance in India is again over 20 years old. And basically it serves the urban and rural poor. It is covering both urban areas and rural areas by providing small unsecured loans which have flexible repayment and which are convenient enough for the families to be able to repay without becoming a burden. So this is the whole concept of microfinance. So some of you, again, MBA students and others may say microfinance is a vaster definition. Microfinance technically includes many other financial services such as savings, remittances, insurance. All these also come under microfinance, but in a limited way, we are talking about microcredit. So microcredit has spread across the country. There are more than 3.6 crore borrowers of microfinance institutions, and close to 3 lakh crore of outstanding loans. And as you can see, a large branch network, which covers almost the entire country. And this basically is the MFI side of business. So there is also the government's other program under National Rural Livelihood Mission, NRLM, which covers almost, or which has a scale of almost the same as the microfinance business. So another 3 lakh crore is lent to for under the SHG program. And probably the clients overlap significantly. So the client numbers will not be into 2, but the amount that is outstanding is into 2, so around 6 lakh crore. And if you look at closely at these data, almost 70% of it goes for agriculture. So if you see the purpose for which it is utilized, and again, no independent verification of that, but by declaration, what they say is, what are you doing with this money? We are using it for agriculture. We're purchasing cattle. We're doing something like that, livelihoods. We are purchasing goats or some such thing. So 70 to 80% of this goes to agriculture. Now, microfinance institutions, as we saw in the last slide, have a huge branch network. You know, India has close to 6 lakh villages. And some of you may know the Indian rural branch network is close to 30,000 branches we have. We have another 20,000 odd MFI branches. So if microfinance institutions have such a network, why are they not offering agricultural credit? So they are offering microfinance loans, which are purpose agnostic. But agricultural credit is easily possible because, like any other business, once you have a channel, you can sell anything. You know, if you have a channel which sells, let us say, products of Hindustan Lever, we can also use that channel to sell refrigerators, air conditioners, or motorcycles. So if there is already the delivery channel in place, why are they not doing agricultural credit? And I think this is a one-way lecture, but when we come to the Q&A, probably if you guys have any answers to that, I would be happy to know. Broadly, I think the reason why it is not happening is because the cost of delivery of microfinance in India is closer to 10%. You know, the cost of delivery of credit at the doorstep to the poor households in India is close to 10%. And that cost has to be loaded onto the cost of the funds. So the cost of money borrowed plus delivery cost plus profit margin. The ultimate lending rate of microfinance institutions is closer to 24 to 26%. Now, agricultural credit may not afford that kind of cost. So agricultural credit under Kisan Credit Card is available at 9%. And if you're prompt in repayment, you will get a 3% rebate. So effectively, your cost of borrowings under Kisan Credit Card is 6% and below. Compare that to microfinance, it is 20, 24, 26, 28%. And the risks associated with agricultural credit. So agriculture, because it is based on monsoon, it is weather-based, climate change is again impacting agricultural operations, and therefore it is exposed to all these risks. And any lender, because he has lent for agriculture, is exposed to these risks. And add to that the political risk. Now, I think every political party before the elections is doing the same thing about loan waivers. And irrespective of what is good or bad about it, the political risk in agricultural credit is seen as very high. Credit behavior of farmers is another thing. Microfinance institutions have repayment rates of 90% and above consistently over a period of 20 years. But farmer financing has not seen that equal level of credit recoveries. So therefore, there's a feeling that farmers are deliberately not repaying. It's better to do more of microfinance or loans without a purpose. You don't link it to agriculture. You give a loan, but you say you repay from whatever sources you have. Once you link it to agriculture, he will say crop is gone, drought, flood, seed didn't germinate, all kinds of stories the farmer will tell to avoid repaying the loan. So we go to now fintechs. Basically, fintech, and if you add ag before that, agricultural fintech. So fintechs which are trying to lend to agriculture is that. So there are many in this space or trying to use technology. The combination of UPI, the combination of broadband spread of internet, as well as using data. So, now using satellite images, you can capture very high resolution data. Using many information of the people, you can capture their whole credit behavior. You can have a look at their bank accounts. You can see what yields they got. So there's a lot of data available beyond just a bank's statement. And these are being used by different borrowers to do analysis. And based on these analytics, it is possible to assess the risk profile of a borrower. For example, a very simple thing is the person paying his electricity bill on time. If he's paying his electricity bill on time, it shows that he's diligent about his dues. So he may, we can't say he will, he may repay loan on time because his otherwise behavior is showing a very systematic and a disciplined approach. Samunati, Jai Kisan, these are names, I think those who are in the Agri space and MBA students would know about these. And these are institutions which have been there for some time and lending to farmers. Samunati is an NBFC. Jai Kisan is more of a company which on-lends by borrowing from banks. Upaj is one new age lender in the agribusiness space, and which is trying to do what we are talking about, microfinance lending in agriculture. So they are operating, I'll give you a few details. These guys are operating in Bihar and Uttar Pradesh, some of the most difficult or notorious areas of India where lenders get scared to lend. And they are operating in those spaces, lending at 21% with loan sizes. Again, as you see here, typically if you go to a bank and say you want a loan, and if the loan officer says, how much do you want? And you say, I want 5,000 rupees, he will throw you out of the bank because the cost of processing a 5,000 rupee loan in a banking system is more than 5,000. The officer himself would be drawing a salary in a few lakhs, and then all the infrastructure, the support system. So small ticket loans are unviable for banks to process. And institutions like these are able to solve that problem by doing all the origination of these loans. So what they do is they pool together, let us say 100, 200 borrowers' applications, and then approach the bank and then ask the bank or the lender to finance. And the repayments are in EMI. So unlike Kisan Credit Card, where the farmer is given the freedom to repay whenever he has money. And if you ask the farmer, he will say, I never have money. Why didn't you repay? I don't have money. So here the repayment schedule is predetermined, like in microfinance, in small installments at monthly intervals post a moratorium period. So this structure has been evolved very similar, taking lessons from microfinance, and has been successful so far. We cannot conclusively say what is the performance. These loans have been given out for 2 seasons quite successfully, fully recovered, and hopefully this institution Opus is trying to grow its book significantly in Uttar Pradesh and Bihar. And the purpose of the loan here is only for input. So you cannot take the loan in cash. It will be dispersed only to the input provider where he has gone and purchased the inputs. And that ensures the end user fund. So this is basically the model of microfinance in agriculture. The interest rate looks high, but I think any alternate channel apart from banks, if it has to cover its costs, will be 20% and above. Okay. So the basic challenge for fintechs, is farming viable is a big question. Many of you, I understand, are Agri students in this. Most people say that if we sit down with pen and paper and start calculating, the cost of cultivation and the returns from agriculture, it is negative. And therefore, at what price should we lend to agriculture? If the returns are so low, is 25%, 21%, the right pricing of credit for agriculture? That is a challenge that fintechs have. Commercial banks, have the ability to give at lower rates because their cost of funds is much lower. And they can cross-subsidize it against the other business portfolios. Fintechs, again, are most of the time either NBFCs or they have to borrow from other formal financial institutions and lend. So it becomes a limitation of resources. So you go to a NBFC or you go to a bank, they'll give you 10 crore or 20 crore. But the need, as we saw in the first slide, the overall credit need of the country is in lakhs of crores. Third thing about fintechs in the rural areas is, all credit is all about collection. It is not about lending. Credit means how efficiently can you recover the loans that you are given. Lending, anyone can do. We can also stand under a street light and give money and people will come stand in queue and take. Success of credit is in the ability to recover the money. And for that, you need an on-ground presence. The on-ground presence has to be either through your own staff or through some other mechanisms like agents or some institutional structure. Community organizations could be one way. So these are all the challenges that fintechs face. They think that they have the solution, technology to do it, but almost nobody has been able to significantly grow the market, right? So this probably is the end of my presentation, the last few slides, that if credit to agriculture, to small farmers has to increase, the only way is to get the banks to get up from their sleep and start lending. And this they are not going to do on their own. They need to be pushed. They need to be driven towards doing it. And that can only come from the government. Government has to compel banks to open up their purse strings and start lending more and more to agriculture. And fintechs, all the technology that has been developed. There are several new fintechs you should see. For example, SatSure. SatSure is one of the fintechs which works with SBI, ICICI Bank, and HDFC. So if the SBI wants to lend to a farmer, it enters data of the farmer. SatSure goes and does a satellite imagery of the area of that farmer, sees historical data on what crops he's growing, how his productivity and production. Simultaneously, they go and check the CIBIL score, the historical records of the farmer's repayment capacity. Combining these two, they can give a loan with a fair degree of confidence that it will not become an NPA. It will not be on default. So this is where we need to move forward. We need to combine the resources of the bank with the technology of the fintechs and the lessons from microfinance of being able to provide small doses of credit to farmers when they need it, and not in a way that is convenient for us. Okay. So good credit product. What is a good credit product? What is a good credit product for a farmer? It has to be adequate. First thing, if you give only 80% of what is required, he will have to again go to the money lender to get another 20% at a very high cost. So credit, if it's not adequate, is a waste. It has to be appropriate also. You go to a bank and you say, I want to do organic farming. The banker will say that this is not covered under crop insurance. You declare that you are growing paddy and you do what you like with the loan. Suddenly there is a natural calamity and the farmer claims. The satellite image will show that instead of paddy is growing something groundnut, and the claim is not settled. So these are all the problems. The banking system products are not appropriate for the farmers. Affordability, as we were talking about, credit has to be affordable. 24, 26% microfinance rates cannot be the same for agricultural lending. It has to be timely, another thing. So credit has to be provided at the time when it is required. Just when you have the first monsoon rains and you want to till the soil, sow the seeds, he should have the money. The banks will take their own sweet time to lend. And I think the last one is a very important thing, hassle-free. The banking system, in the way it treats people, especially the poor people, is a lot of improvement that is required. The banking system looks scary to a large number of small farmers, and therefore they even hesitate to go to the banks. And if you go there, you are sent around, you are told to come 10 times. Every time they ask for some new documents. This whole problem, I think many of you may become agricultural officers going forward. How you treat your small farmers is still something we have not solved in our country. Okay, so that broadly is where I would like to end. This is a fairly new and complex subject. Lots of people trying to solve this problem, or lots of people claiming that they have solutions. Nobody really has the solution. We are all searching for it. The money is there. Technologies are there. People are in need of credit. But I think all these pieces have to come together, and the music, the orchestra has to play the music in a way that this results in increased credit for small and marginal farmers. All of you young people, I always get excited when I speak to young people. You're the future of India. You can make this happen, and I hope you can solve it and improve the life of farmers in a way, and bring prosperity in rural India. Thank you so much for your patient listening. Any questions you have, I'll be available to respond. Thank you.
Hello,
Thank
sir. Very good evening, sir.
Yeah.
Yeah, sir, I'm Mani Chandra from Manipur, sir.
Can you switch on your camera if you...
Oh, sir, I don't know whether I can.
Yeah, I have given you access, Mani Chandra. Please
Okay.
accept it. Okay.
Okay, go ahead. Yeah. Oh, okay.
Sir, good evening,
Good
everyone.
evening.
Sir, you said many challenges faced by small and marginal farmers only, sir. So, still, are we going to wait for the government's allowance only, or is there anything that we can do from private sector, sir? It will be very hard, since the one you mentioned about UPA's farmer financing product, that is also covered only in Bihar and Uttarakhand. But the farmers, population is spreading in all parts of India, sir. So, are we going to wait for government's thing, or
So,
is there anything we can do?
The answer to your question, Mani Chandra, is that private capital will come where there is profit. The private capital is not in the business of charity. So if there is money to be made, then money will flow to those sectors. And as I see, because banks are having the money, banks are not only government banks. We also have private banks, ICICI Bank, HDFC Bank. And this is our money. It is not the bank's money. People's money has been deposited there with the intention that they lend and gain returns and then they pay you interest, right? So it is not government that is having to share the responsibility. It is the government that has to direct these people to lend to small and marginal farmers. It is not, the money belongs to the people. You and I have deposited money, and that has to be lent for this purpose. It can be cross-subsidized from other businesses. So basically, it's also an indifference of the regulators, indifference of the government to be able to handle this. They have not given it the due importance. Resources is not a constraint. Private sector, all said and done, although we know all these Ambani, Adani and all put together, they are 10% of government. Government is a huge animal. Its capacity to deliver is multiple times of what any private sector can do. In places like Manipur, again, I have worked in Nagaland, I worked in Assam, and I think local institutions have to do it. Local institutions have the capacity, because if you see your Manipur State Cooperative Bank or the Manipur Rural Bank, I don't know how these are, but they themselves have the resources and the ability to lend. It need not even come from mainland India. Yeah.
Thank you, sir.
Thank you.
Yes, sir. There is one question, sir. Is it fully possible to replace the traditional money lenders in rural part with fintech, as there is a huge lack of technical gap among small and marginal farmers?
Who asked this question?
Person named Aditya Mukherjee.
Okay, Aditya, are you there? Can you speak up? Yeah, Aditya. So what happens, I think these are very understood spaces. The credit given by the money lender is used for purposes different from what is the credit given by formal institutions. So typically a loan from a money lender is taken by a lady of the house, for social functions, for when the daughter comes to her house, or for religious functions. So that is a different nature of borrowing from borrowing for agriculture. And technology and fintechs can replace to some extent. We need to bring down, the only way, like microfinance, if we have alternative available in the credit market, the rates of interest will come down. So microfinance, for all its spread, has not shut shop of money lender. But the money lender has adjusted his interest rate downward because people now have a choice between borrowing from him or borrowing from the SHG or borrowing from the microfinance institution. So efficiencies of markets will improve. Multiple options have to be there. Money lenders will continue to be in the most evolved markets in India also. Money lenders continue to exist. The fact that a money lender is a villain is an overstated, simplified explanation. Yeah, Aditya, what do you do?
So actually, I am pursuing BSc Agriculture. I'm in
Okay, okay. Yeah. Thanks for asking. Okay.
Thank you, sir.
So, Sonu Shankar, if you could unmute and ask the question. All right. Anyone else? Lakshmikant, could you unmute and ask your question, please?
Hello.
Yeah.
Good evening, sir. I want to ask if any agri fintech company has started its business, and then how many interest rates should be they start to when their business? Means there are any rules of restrictions like Reserve Bank of India to lending agriculture commodity business.
Correct. Good question. There are no guidelines or let us say cap on interest rates. So the institution can fix interest rate as per its own methodologies. It is usually a function of three factors: cost of borrowings of the institution, operating cost, the cost of operations, and the risk cost. So these are the three costs which determine the ultimate lending rate in agriculture. Typically, again, today, for example, Samunati's interest rates start from 18 to 19% to 2022. Jai Kisan's rates would be higher. It could go up to 26%. So each institution is fixing its rates. There are no Reserve Bank, let us say, caps on interest rates as of now.
If there are any mitigations or risk mitigation factor in all field, means loan recovery or like credit card matters, if raises, then what should be the platform to settle the loan dispute ratio in farmer?
Correct. So all of these are regulated institutions. Therefore, you can go to the Reserve Bank or the registering authority and complain. These are very complicated, not easy to do. They are only on paper. So basically, many options are there for you. As a consumer, you can go to a consumer court. If they've used methods which are not permitted by the law, you can go to the nearest police station. There are different ways of lodging a complaint if you feel you are not properly treated. But all these require adequate knowledge and evidence. Most of the time, the borrowers sign on papers without even reading them. And the documents are designed in a way that they favor the lending institution. So if you go to a court and if you read those loan agreements that you have agreed and signed, you have sold away everything, including the shirt that you're wearing is given away to the bank when you borrow. So later on, you should not complain about it.
Okay. Thank you, sir.
Sir, good evening, sir.
Yeah, good evening.
Sir, my name is Murugesan.
Oh, okay.
Yes, sir. I retired as a director from a central government organization. Basically an engineer.
Which organization?
Central Power Research Institute. I retired as a director general.
Okay.
But after retirement, I wanted to have agriculture as my second career. So I did my 3 years course from TNAU Coimbatore.
Okay. No,
that is called a Bachelor of Farm Science.
Right.
And I have undergone at least some 15, 17 kinds of short-term course to long-term courses, like many things I have undergone. Now, sir, I'm also a consultant. I'm earning at least 4 to 5 lakhs per month.
Very good.
But sir, I would like to have my rest of my life only for agriculture, large scale farming. So, in fact, I already purchased some 20 acres.
Very good.
Sir, I want to say something like 100 acres. I want to do the 100 acres, 200 acres. From dry land, we buy that and we convert it into good practices like rainwater harvesting and so many things. You do that. So I want to avail some large amount of loan, including buying a land and all such things. How do I do that, sir? What should I do?
Interesting question. Interesting question. So, land purchase is seen as a speculative business.
Okay.
So no lender gives money to purchase land.
Okay.
Right?
Okay.
So if you purchase the land and then go to a banker or a lender,
Okay.
they will give you for other things, right?
Okay.
So purchase of land is there as a scheme,
Okay.
but for very poor people. It is not on this scale of thing. So there are different methods being tried.
Okay.
I think in the startup ecosystem, people are also doing collective farming. So they are organizing urban people, pool money, and then somebody like you is taking agricultural land on lease and cultivating and saying, once we net off the cost, we will pay you money. So those kind of mechanisms, contract farming, these are becoming popular, especially for people who are having land but not interested in agriculture. So their children have gone to the US or this thing. They are no longer able to supervise agriculture, but they don't want to sell away the land. So many people like that are giving land on very large areas to be cultivated on lease. And then these people are taking on lease, do not have money. So they are going again to HNIs and other people are having money and saying, you give us, and then we will do cultivation for you. And those kind of models are also nowadays becoming popular. So these are the mechanisms. Mere purchase of land is a speculative activity. No lender, organized lender, generally gives credit for land purchase.
Okay, only through this leasing method, you buy large land.
Yeah,
then
one of the methods is leasing. One of the methods of which is also gaining popularity. Yeah.
Sir, then guess once you develop the land with irrigation, so many things, no, sir. Then what is the duration of the leasing we should insist, because we develop the land?
Yeah. So those have to be figured out. Those have to be figured out, agreed upon, and probably also there could be some way of, let us say, payment on installments. Many different ways can be worked out of how to share the upside between the seller and the buyer. That has to be negotiated and then figured out. There are mechanisms of, let us say, buyout over a period of time. It's similar to, very similar to urban land where you give it for development as, let us say, flats, apartments, similar models.
So ultimately, we have to buy that kind of arrangement. We have to make it, no, sir. Ultimately,
yes. Unless you have a lot of money, unless you have a large amount of capital, which people who have retired from employment may not have.
Yeah. That is true, sir. That is true. So nice, sir. So nice. Thank you very much, sir. Thank you.
Okay. Thank you.
Thank you, sir.
So, there is another person. Sonu Shankar, if you'd like to unmute and ask the question. Okay. So there is one question, sir. Is there any fintech that undertakes operations and sales of farms?
What is that? Can you repeat, please?
Yes, sir. Is there any fintech that undertakes operations and sales of farms?
All of these guys, like Arya, who was there before, they do this. They do warehousing and they help in marketing. Samunati, all of these people who are doing credit or agri operations, they also become intermediaries in facilitating sale of agricultural commodities. So many of them, Dehat or so many other, Big Heart, Farmart, Pay Agri, all of these are market linkage companies. So most agtechs are doing market linkage.
Okay, sir. And one more question is Caspian public or private organization?
Okay. So Caspian is a private limited company.
Okay, sir. And one more question, sir. So what's the role of primary agri credit societies in microfinancing?
Okay, good question. That requires a session by itself. Primary agricultural credit societies were basically established to extend agricultural credit to the farming community. If they had succeeded, then this session would not have been there at all. Unfortunately, for various reasons, they have not been able to deliver significantly. They are politicized organizations. To an extent, Tamil Nadu has a good cooperative structure. Some district cooperative banks in Andhra, some in Maharashtra, here and there are doing good, but most of them are irrelevant. Only about 15% of agricultural credit is given by cooperative banks through primary agricultural credit society. 80% is done by commercial banks, including rural banks. So therefore, they have to coexist. Now, the government of India has recently announced that they'll have a PSES in every village or something like that. These are institutional structures. There are issues of resources. There are issues of technology, manpower, all of these constraining. But where primary agricultural credit societies are doing well, ultimately they are the ideal model for agricultural credit.
Right, sir. There is another question, sir. What are other facilities of credit lending institutions for FPOs?
Okay. So again, I think we do have other speakers who are experts on FPO financing. There are today close to 18,000 FPOs in the country. Now, that is the number of FPOs. Effectively, to my knowledge, 2,000 to 2,500 FPOs have got credit. Majorly, the major portion of this credit has come from NABKisan. So NABKisan is a subsidiary of NABARD, which has lent to around 1,500 FPOs. Then you have Samunati, which is the second largest lender in the FPO space. There is Ananya Finance, FWWB, and many other smaller commercial banks have also started lending. Bank of Baroda is one lender which has done significant lending to FPOs. Here and there, commercial banks have lent to FPOs. Avanti Finance is another lender. So there are multiple lenders who are lending to FPOs. Hopefully, commercial banks will increase their stake. If there are specific FPOs are doing well, I may be able to help them to get access to credit.
Right, sir. Thank you, sir. And there is another question, sir. How can any company, how can anyone start agriculture fintech company?
Okay, so whose question is this?
This is Lakshmikant, sir.
Okay, so Lakshmikant, what do you do?
Hello.
Yeah. So what are you doing, Lakshmikant?
We are one farmer producer company, as well as we are trading agro commodities like cotton, soya,
Okay. So
fruit commodity also.
Fintech is a complex thing. It is marrying finance and technology. So either you should be a finance person or a technology person, or you can engage people from these spaces. It is not something easy. It's a nice word to know, but if you want to get into fintech, it's a capital intensive. So either people from the software side or people from the banking side are generally promoting fintech companies. We can do everything that a fintech can do without having a fintech also.
Okay. It's an experienced person needed.
Not really. You can also do it. I'm not saying you can also do lending. See, fintech is only a terminology. It's nothing but using some technology. If you use your mobile phone to lend, that is also fintech. So you use your UPI to lend to your friend. You are also a fintech because you are using technology for the purpose of lending. Okay.
Yes, sir. Yes, sir. There is another question, sir. Is microfinance collateral based or land based? What exact criteria they use to give finance to farmers?
So microfinance loans do not give loans for agriculture. By chance, the borrowers, because microfinance 95% are women borrowers, technically there are no collaterals except what are called social collateral. Social collateral is basically 5 people agreeing to guarantee each other's loans. So if one of them doesn't pay, the other 4 will take responsibility for paying on their behalf. So social collateral is the main mechanism for lending. These are largely unsecured. These are lent in a manner that you have multiple income streams. So typically in a rural household, there will be NREGA money, there will be agricultural labor that they will do. They may have a dairy animal, they may have a small shop or something else, or doing some other kinds of work which give them income. So there are multiple streams of income against which the loan is given. If you study lending, rural lending, some of you will study mortgage of land and mortgage of property is meaningless in rural area. You can never take possession, you can never sell it. So even if you feel then there is security. All other lending is generally unsecured. People in rural areas, contrary to our assumptions, are good at repayment. Most of it, 90% comes back without even you asking for it.
Right, sir. And there's another.
Somebody from Samunati or someone who does value chain financing should be asked to reply.
We'll just wait 1 or 2 minutes if there are any more questions, sir.
Okay, so in value chain financing, basically the strongest link in the chain stands guarantee for the weaker links in the chain. So if you have somebody, a trader who is selling the produce and the production of the farmer is being sold to that trader, on the strength of the trader's credit history and his ability to market produce, the farmer can be given trade finance. So value chain finance is basically unlocking value across the chain and financing transactions so as to speed up payments and collections.
Okay, sir. Okay, sir. Thank you so much, sir. That was really a great learning experience on this very important topic. And thank you so much for your valuable guidance and insights, sir. Thank you so much, sir.
Thank you. Have a great evening.
Thank you, sir.
Bye-bye.
Thank you,
Thank you,
sir.
sir.
Thank you, sir.
Thank you, sir.
Yes, I request all the participants to just wait for 5 more minutes. Our next guest speaker would be joining soon. Kindly be patient and kindly wait and stay online. The patented session by Shyam Kumar Katta, sir. Mr. Shyam Kumar Katta holds a PhD and is change maker social development professional, designing livelihood programs, SDGs, building global partnerships, ending poverty, hunger, women empowerment, smallholder farmers with $95 million portfolio. He is a scholar in rural economy, women empowerment, and livelihoods with a study on digital agriculture, social development, and sustainable goals. He has 19 years of professional experience with 19 projects towards flood and relief, flood and COVID, livelihood, women empowerment, food security, climate smart agriculture, biodiversity,